Welcome back to the Means Report. Moving on with financial advice on this Sunday, especially advice for those of you who are considering retirement or switching jobs. Our investment advisor, Jeff Fehrman, has more.
Good afternoon. I'm excited to be back with you today. Last month we talked about what's going on in the new year, what should you be thinking about with your assets. We're going to focus in a little bit more on, I think, another timely topic at the beginning of the year, but a specific topic, which is going to be for our viewers out there that are changing jobs or retiring. Tends to be timely because most people frequently change jobs or almost always retire at the beginning of the year. I think just emotionally it's a start to the new year. So we want to focus in on that. Abram talked to us about tax decisions last week, so let's focus in on this. Really the big decision is how am I going to use my income if I'm retiring, as well as what should I do with my retirement assets in the plan, and that applies to retirement or job changers. So let's focus on the typical three options when we change jobs or leave our job, which is first, taking the money out of the plan. That's always an option. When you leave your employer, most plans will allow you to take the asset as a lump sum. There's a couple problems with that. First one is plans will withhold 20% of the assets for taxes. That's your first tax distribution. Secondly, if you're under age 59 and a half from a tax perspective, there's going to be a 10% tax penalty at tax time, along with whatever our ordinary income is. So again, you'd have to consult your tax professional in your particular situation, but the bottom line is you're going to lose control of those tax assets, as well as if we spend those dollars, what are we going to use for income if we're in retirement? So fairly costly. Next would be some plans, and again it's plan specific, would allow you to keep the asset in the plan. The advantage to that is, I guess you are familiar with the plan. The disadvantage is typically a retirement plan will have fewer investment options as opposed to our next option of rolling it into an IRA. And most individuals feel a little disconnected with the plan as well as the company once they change jobs or retire. So our last one we'll talk about is rolling the assets into an IRA. That's beneficial because you can avoid income taxes at that point in time. Typically you're going to have more investment options available if you roll it to an IRA. And of course, I'm biased in this commentary, but if you're using an advisor like our firm, that's going to allow you to have somebody that's going to help you monitor those investments and also evaluate the 4 risks to the investments that we'll talk about next. So those 4 investment risks, whether it's in the plan or in an IRA that you need to be thinking about for your retirement assets, are first of all, your asset allocation. What is your mix of investments? That's your cash, stocks, bonds, commodities, all the different risks. This historically has been the biggest driver of returns and risks. So you want to evaluate that based on what your timeline is and your income that you're looking for. Next is sector risk. And this sounds fairly complex, but it's really not. It's just how much risk are you taking in different industries. So you have a lot of money in one particular area of healthcare, financials, or technology. Those aren't good or bad investments necessarily, but are we just taking incrementally too much risk? So that's another area to look at. In our fixed income or our bond piece of our portfolio, we really want to focus on 2 of the biggest risks. There's lots of them out there, but the 2 big ones are interest rate risk and default risk. And they're pretty straightforward. The interest rate risk is if I'm locked into a rate and interest rates go up, I could have some loss of purchasing power and actually my investment could go down in value, depending on the type of bonds that we own. And then default risk is if we own a company or a particular international bond or somewhere that's riskier, could those actually default and go out of business? We could lose our capital. So those are the 2 biggies from a bond perspective. And finally, what I call geographical risk or country risk, you need to think about, especially if you're looking at international investing. Clearly, there's more risk in some countries internationally. So you need to be thinking about currency risk, political risk. Some places are not as stable as here. Even though they may allow for good growth potential, you need to look hard at that. So here's some items for here in the new year to think about for your job change, retirement. You may not be doing either of those, but I bet you have a family member or friend. Again, if you have more questions, feel free to call or email me at our office. And if you have topics that are of interest for future programs, as always, contact our office. And we appreciate your time. Have a good afternoon.
All right, Jeff Fehrman, the Fehrman Investment Group, there is his information. Get in touch with Jeff. He can definitely help you out. Last week, we had a special broadcast with local officers from Richmond and Aiken, South Carolina, talking about Richmond County and Aiken, talking about their recent losses. And our question, what does it mean to you, was this: after seeing 3 officers gunned down in the line of duty in the past few months, what can be done to protect our men and women in uniform? And we got some good responses. First of all, there's this one from Melissa. She says, be more aware of our officers' safety. Don't be afraid to report unusual activity. Thank you, Melissa. And there's this from Janice, talking about how to keep our officers safer. Quit spending money on the T Center and a stadium we don't need, and all the other worthless garbage that the people of Augusta have no use nor want for, and use the money for more police officers and better protection equipment for them. Janice, we thank you. And from Kenneth, use their resources. Put 2 officers per car. Use their reserve officers or hire new ones. The officers we have are doing a great job. And they have large areas to cover. Let's get with our government and push for more money to protect us better. Kenneth, thank you. And thank you all for your questions. Next week, Mayor Deke Copenhaver is going to be here. If you have a question for Mayor Copenhaver, send it to us. What does it mean to you is the question, and you can get in touch with us several ways. You can always find us on the website, WJBF.com, keyword means report. You can follow us also on the social media, Facebook and Twitter, and you can email us your ideas. Marlena Wilson, mwilson at WJBF.com, or me, Brad Means. There's my email address. For Levi, Marlena, and all the members of the Means Report family, take care.